Hi everyone, welcome to this session of the Tiger Academy, US Stock Financial Statements for Beginners. After we talked about the 3 most common valuation indicators in our last lesson, many of you were eager to try out your new skills to work on the Tiger Trade app. Alas, putting these indicators in practice might not have been quite as easy as you had hoped. For example, some of you may have found that Apple's PE ratio is 29. But is a PE ratio of 29 considered high or low? You will be able to answer this question by the end of this lesson: horizontal and vertical analysis. First of all, what is horizontal analysis anyway? Simply put, horizontal analysis is like comparing yourself with someone else. So, for example, back in high school, whenever your test scores would come back, you'd always want to find out how your classmates did and figure out who got the best score. If you did better than your classmates, you'd be pretty happy. If you did worse than your classmates, then you'd want to keep that to yourself. The scoring is pretty straightforward because everyone is being tested on the same subject. No one's going to compare one student's math score with another's English score, right? Whenever we make comparison within the same field using the same indicators, this is called horizontal analysis. Let's take a look at the chart above. It makes sense to compare the 2 English scores. Likewise, we get a meaningful result when we compare Apple and Microsoft's PE ratios because both are technology companies. But it would be wrong to compare the math score to the English score. It would also be a mistake to compare the PE ratio of Apple with Tesla, since Apple does hardware business and Tesla makes electric cars. This comparison just won't work. Do you understand what horizontal analysis is now? Next, we're going to look at vertical analysis. In vertical analysis, you take a valuation indicator and compare it with historical data. For example, you can see whether or not you are making progress in English class by comparing your most recent test scores to those from earlier in the year. To put it simply, vertical analysis is comparing you with yourself. But when it comes to investing, there's quite a lot of historical data, and it would be a lot of work if you had to find all of it for every vertical analysis. That's why we use quantiles to make it easy to compare data from the past. Valuation comparisons are expressed in quantiles. For example, Jack's son, Jason, is currently in elementary school. Because grades is so important, Jack organized an extra fitness test for Jason each year to see how far Jason has come. Jack uses the quantile method to calculate Jason's fitness test score gains over the last 3 years. Let's say Jason took a total of 100 tests over 3 years. If Jack wrote down each of Jason's scores and put them in order from lowest to highest on the chart, the lowest score would be 0% and the highest scored would be 100%. Once the chart was completed, Jack could compare the scores every time Jason took a test. If the score was in the 90th percentile, then that would mean that Jason had done better than 90% of his historical tests. If, however, the score was in the 20th percentile, then that would mean that he had scored 80% lower than his historical results. Using this method, we can see right away if Jason's test scores are getting better or worse. That's basically what we mean by expressing data in quantiles. Therefore, the PE ratio percentage counts the historical PE ratio of a listed company and shows it as a chart. Many valuation charts provide the 3 or 5 years PE ratio quantiles, which converts the PE ratio of the last 3 or 5 years into quantiles. A lower PE ratio quantile represents a lower historical PE value. That means that these stocks are good value with high potential for future growth. The same is true for the quantiles of the PB and PS ratios. Generally speaking, anything valued at less than 20% on a valuation table is considered undervalued. Anything valued than around 50% is considered an average valuation, whereas anything higher than 80% is considered overvalued. Okay, let's take what you've just learned and put it to use. I believe you know how to read the valuation analysis chart. Let's use Apple's May 25, 2022 valuation chart to conduct a simple exercise. On the chart, you can see that Apple's current PE ratio is 22.29. The quantile is 52.38%, which in the average valuation position. If you follow the trend in the chart, you will see that the current PE area chart of Apple has a gradual downward trend. Therefore, from a PE ratio perspective, the current valuation of Apple has been much lower than the previous years. And if it continues to decline, there may be a bargain opportunity. That wasn't so tough, was it? To summarize, in this lesson we learned two things about trading. The first is that horizontal analysis is when you compare yourself with others. We also learned that vertical analysis is when you compare yourself with yourself. In vertical analysis, we learned how to use quantiles to describe value. If a stock is valued at over 80%, you should think about whether now is a good time to buy it. If a stock is valued under 20%, it could mean a good investment opportunity presented. So, before we end this lesson, here's a question for you to ponder. Can you still buy a company that's already very expensive? We will give you the answer in the next lesson. See you next time!